For this session, we will talk about your real property taxation. And for your real property taxation, we will discuss the power of your LGU again to tax their constituents. But we need to determine now who can tax real properties. So what local government units can tax those local properties and how do they tax those local properties? Before in your local taxation per se, we talk about the powers of your different LGUs to tax certain businesses and what are the rates based on a particular LGU. Now, we are in your real property taxation. The same is true, but in this case, the subject now is a real property. The subject now is a real property, and we need to determine what particular local government unit can impose real property taxation and how do we tax that real property. So those are the things that we need to learn in this particular session. So let's start now with our real property taxation. So what are the fundamental principles? So if you still remember during our discussion in your local taxation, we also discussed some fundamental principles. And if we will look later on, you will see that some items here in your fundamental principles resonates with the fundamental principles of your local taxation. Because again, real property taxation is a branch of your local taxation. It's one of your local taxes. That's why the principles here also resonates the principles in your local taxation. So let's start. The appraisal, assessment, levy, and collection of real property tax shall be guided by the following fundamental principles. So if you try to look at it, there is somewhat a change as to the process of taxation. The process of taxation before is just purely levy, assessment, and then we have your collection. And this is what we are learning for the previous terms and the previous periods. But now, in your real property taxation, there is a new one. First, we have your appraisal, and then we have your assessment, then levy, and then your collection. Of course, your levy and collection still the same. The concept of your levy and collection is still the same. However, the concept of your appraisal and assessment is different under your real property taxation. You learned before when we say assessment under your general taxation, when we try to assess, we look into the particular taxpayer. If the taxpayer has any unpaid taxes or if ever the taxes are properly filed or properly paid. That's how your assessment works in the previous discussions. Now, in your RPT, we have a different concept of assessment. So when we say assessment, this is now the process of the determination of the value of the real property. So this includes, of course, the discovery, the listing, and the classification of your real property. One important matter in your real property taxation is, of course, the classification of real property. So that is part of your assessment. So when you say classification of your real property, perhaps you can hear what type of land is that particular land. So, for example, when you buy a property, what's the use of that property? Is it a residential property? Is it a commercial property? Or is it an industrial property? Or is it for purely agricultural property? So those are classifications of property. So that's part of your assessment. So here, in your assessment, again, the concept in your RPT differs in the concept under your general taxation. Here, we now determine the value of the real property depending, of course, on the listing of that property, the classification of that property. Next, we have your appraisal. For your appraisal, this is the process of determining the value of the property at a particular specified date for a specific purpose. So the difference is that for assessment, uh, you assess, this is the work of your assessors or those working on your local government units known as real property assessors or your assessors, local assessor. Now, in your appraisal, this is the act at the time that one particular taxpayer now pays its real property tax. So that is the act or process. So that's why it is defined as the act or process of determining the value at a specified date at a specified purpose. Of course, the levy, that is the passing of the law for real property taxation, and for the collection, that is the collection of the real property tax. So the levy and collection here, somewhat the same. However, the assessment differs. Okay, so RPT, we have four processes. First, appraisal, then we have assessment, levy, and collection of real property tax. So now we dwell into your fundamental principles. So what are the fundamental principles of your real property taxation? So the first fundamental principle is that real property shall be appraised at its current and fair market value. Sir, what is this fair market value? Actually, the fair market value concept in your accounting is somewhat the same with the fair market value concept under your local taxation. In your accounting, that is the price a willing buyer wants to pay or the seller wants to sell the property in an orderly exchange in the market. Now, the fair market value under your local taxation, real property taxation, is also the price that the seller wants to sell the property, and of course the buyer when the buyer wants to buy the property. So it's almost the same. Fair market value. Next, RP shall be assessed. RP means real property. Real property shall be classified for assessment purposes on the basis of its actual use. As I told you, when we talk about classification, we determine now what is the actual use or the purpose of that property. Is it for commercial? Is it for residential, agricultural, industrial, etc.? And then take note, in classification, it is based on the actual use. So what do we mean by actual use? It is the principal use or purpose of the property. So when we say principal use, if you have the parcel of land, if that parcel of land is dedicated purely for agricultural, then its principal use is agricultural. But even if it is, let's say, classified as agricultural, but you use it for residential, then it must be assessed for residential purposes. Remember that it must be classified per actual use. So let's say the local assessor classifies the property as agricultural property. However, when you are using that property, you do not use it for agricultural, but you are using it for residential. Therefore, at the time of assessment, you should assess it at its actual use, which is residential. Letter C. The real property shall be assessed on the basis of a uniform classification within each LGU. So our uniform classification, of course, is now set by our local taxation. And later we will discuss what are those uniform classifications. But although we are already mentioning it as of this moment, we are mentioning residential, agricultural, etc. Next, the appraisal, assessment, levy, and collection of RPT shall not be let to any private person. You already know this one. We have discussed this in your local taxation that we do not let any private person collect, assess our local taxes. And finally, the appraisal and assessment of real property shall be equitable, which is again a fundamental principle of your local taxation. As I told you, the fundamental principles here of actually resonates the fundamental principles in your local taxation. And letter D and E are those items under the fundamental principles of your local taxation. That it is non-delegable, meaning you cannot delegate it to any private person. It is only the function of your local treasurer. And then the appraisal and assessment must be equitable. Equitable. So those are the fundamental principles of your local taxation, particularly real property taxation. Take note, it must be assessed at its actual use. So let's proceed now to real property taxation per se. Our first question is, what real properties are covered under real property taxation? First, of course, is your buildings, lands, and other structures, including machineries. Take note, the real properties here includes machinery. So when we talk about machinery, these are your machines, your equipments, any mechanical instruments, appliances, etc. As long as it is for the use, as long as the use of that machine is for the real property, it embraces any type of machine. Okay, machinery, any type of machines, equipments, mechanical instruments, appliances, etc. But are all real properties subject to real property taxation? The answer is no, because we have certain exemptions to your real property taxation. And what are those certain exemptions? First, of course, if ever it is owned by the Republic of the Philippines or political subdivisions. Actually, these exceptions, you have learned this one in your constitutional limitations. You have learned this one in your constitutional limitations. So these are limitations to your real property, to your taxation, but in this case, real property. If you remember, real property is actually under your constitutional limitations are limited. When we say limited, only certain real properties because most of the real properties owned by the government, owned by GOCC, owned by your churches, etc., is not subject to real property taxation pursuant to our constitutional limitations. And again, we discussed them today. So what are the exceptions to your real property taxation? First, owned by the Republic of the Philippines or its political subdivisions. Second, owned by charitable institutions, churches, parsonages, convents, mosques, non-profit, or religious cemeteries. Next, machineries and equipment of local water districts and GOCCs. Take note, for GOCCs and local water districts, only machineries and equipment. Next, real properties owned by cooperatives under your cooperative act, under cooperative act. So any cooperative duly registered to the CDA, their real properties are exempt from real property taxation. Now, what local government or whose local government can assess real property taxation? So only provinces, cities, and municipalities within the Metro Manila area. So only this can assess real property taxation. Take note, only municipalities within the Metro Manila area, not all municipalities. Because if you remember, under local taxation, there is no specification as to the type of municipality, purely provinces, cities, or municipalities, and barangay. There is no specification as to the type of municipality. But for real property taxation, only those municipalities under Metro Manila area. So how do we assess for your real property taxation? So first, we get for the fair market value. Then we get for your assessment level. Sir, how do we get for your assessment level? So there is a table which provides for the different assessment levels depending on the property, whether that is a land, that is a building, or that is a machinery, or that is a special type of property. So later, I will discuss what are the different assessment levels for these types of real property. So market value multiplied by assessment level is equal to your assessed value. At some point, assessed value is also known as your taxable value. Assessed value is also known as your taxable value. So if the question is, how do we compute for your assessed value? It is equal to your market value or your fair market value multiplied by the assessment level. Okay. How do we get for your assessment level? It is based on a table which gives the different assessment level for land, building, machinery, and your special types of real property. Then assessed value or taxable value multiplied by tax rate is your real property tax. What is the tax rate? What is the tax rate? The tax rate is 1% for province. If it is city or municipality within the Metro Manila area, it is not exceeding 2% of the assessed value. So this is the basic real property tax. Actually, most questions here are what is the real property tax and what is the amount of your SEF or your special education fund. So when we say real property tax, that is your basic real property tax. So after getting the assessed value, you multiply it to your tax rate. And we have these different additional real property taxes. First, we have your additional levy for your special education fund, or as I told you, your SEF. The SEF is 1% of the assessed value in addition to the basic RPT. So aside from the RPT, you will get an SEF. Take note, 1% for province is the amount of your RPT, 1% for province, and 2% for your city or your municipality. But for municipality, only those under your Metro Manila area. And another, we have your SEF, 1%. 1%. Sir, whether province, city, or municipality? Yes. This is whether province, city, or municipality. It's still 1% of the assessed value. How do we get for the assessed value? It is market value multiplied by assessment level. Next, we also have ad valorem on idle lands. If in case it is an idle land, you have not exceeding 5% of the assessed value for your idle lands. But generally, as I told you, questions concerning real property taxation dwells only to your basic RPT, including your SEF or your special education fund. Take note, what is the process? First, the fair market value. That is always given. You multiply it to your assessment level, and then you multiply it to your tax rate. For province, 1%. For city or municipality, 2%. Including SEF, which is 1% for either province or city municipality. Idle lands, 5%. So what are the different assessment levels? So the following are the assessment levels. So for land, we have these different classifications, as I told you. We have either residential, agricultural, commercial, industrial, mineral, or timberland. And these are the different assessment levels: 20, 40, 50, 50, 50, and 20%. Next, we have your buildings, depending whether it is residential, timberland, agricultural, commercial, or industrial. And we have this over to not over and the different assessment levels. Again, for machineries, we have these assessment levels, whether it is agricultural, residential, commercial, and industrial. And then we have your in special classes for special types of real properties if ever it is dedicated for cultural, scientific, hospital, local water districts, GOCCs with water districts. GOCCs with water districts. So again, what is the process? First, we get for the fair market value and we look as to our actual use. So what is the actual use? It is either residential, agricultural, commercial, industrial, mineral, and timberland. Next, you look into the type of property. Is it a land? Is it a building? Is it a machinery? Is it a special class? Fair market value multiplied by the assessment level depending on the actual use and the type of property. Then we have your assessed value. Assessed value multiplied by your uh, tax rate will get your RPT and your special education fund. Okay, let's have some examples. So, yeah, so that you can see the assessment levels. So, for example, we have here a land fair market value, uh, 8 million. And then there is a building on that land, which is worth, let's say, 3.5 million. 3.5 million. So we compute the RPT and SEF, assuming the actual use is uh, residential, assuming the actual use is agricultural for province and for city or municipality. Okay. So first we compute the actual use if the actual use is residential. Okay. So we have your land. How much is the value? 8 million. Fair market value multiplied by assessment level. So since the actual use is residential, you go to the type of property. What is the type of property? The type of property is a land. Okay, land. So if that is a land, what is the assessment level? If our actual use is residential, residential is 20%. So you multiply it to 20%. So what is our assessed value? Our assessed value is equal to 8 million times 20%. So this is 1.6 million. Then we have here a building. Building. And since the actual use here is agricultural, since the actual use here is residential, so we look into a building residential, value is 3.5 million. Building residential is here. Building residential here. Let's change the color so that we could see. Building residential. If it's building residential, the value is 3.5. So that is over 2 million, but not over 5 million. So what is our rate? 40%. So our assessment level is 40%. So what is the assessed value? 3.5 million times 40%, 1.4 million. So what is our total assessed value? 3 million pesos. Now, we can now compute for the amount for province and for the city or municipality. For province, you multiply that to 1%. For city or municipality, you need to multiply that to 2%. So how much per province? 3 million times 1% is 30,000. For city or municipality, 3 million times 2%, that is 60,000. Okay, did you get how we computed for this one? First, determine the actual use. Based on the actual use, you get the assessment level. So our real property is land. So we go to the land. And then the actual use is residential. So go to residential. The assessment level is 20%. Next, building. Our real property is building. So andito lahat yung sa building. And then, what is the actual use? Residential. So we go to your residential. And what is the value? 3.5 million. That is over 2 million, but not over 5 million. So our assessment level is 40%. So total assessed value is 3 million. Now, what is our real property tax? Our real property tax is 30,000 and then 60,000. 30,000 for province and then 60,000 for city or municipality. Because we said the tax rate for province is 1%, for city or municipality it is 2%. Now, what is the special education fund? That is 1% multiplied by the assessed value, 30,000. 30,000. Clear? Okay. Another example, if the actual use is agricultural, okay, if it is agri, so we go to the land. So the value of your land, again, FMV multiplied by assessment level will give you your assessed value. The fair market value of your land, 8 million. You multiply it to your assessment level, it is an agricultural property. So land, agricultural property. So agricultural is 40% for your land. So 8 million times 40%, assessed value is 3.2 million for land. Next, We go to your building. For building, our value is 3.5 million. But since it's agricultural, you go to building agricultural. Buildings agricultural. There it is. The value is 3.5 million. So that is over 2 million. So 50%. So 3.5 million times 50%, we have 1.75 million. 1.75 million plus 3.2 million. Our assessed value, therefore, is 4.95 million. 4.95 million. So if we get for the local tax for RPT, what is the RPT for your province and for municipality? For province, 1%. For city or municipality, 2%. 1% of 4,950,000 is 49,500. And 2% is 99,000. How about our special education fund? Our special education fund is equal to 1%. 1% times 4.95 million will give us 49,500. 49,500. Okay, so it's quite easy, guys. You just need to determine the property. So look into the properties, is it land, building, special classes, or machineries? And then you look into the classification. Is it residential, agricultural, commercial, industrial, mineral, timberland for land? For building, is it residential, agricultural, timberland, commercial, or industrial? For special classes, is the class cultural, scientific, hospital, local water district, or water district operated by GOCCs? For machinery, is it agricultural, residential, commercial, or industrial? And then you multiply the fair market value to the assessment level to get for your assessed value. So assessed value of land, assessed value of building will give you your total assessed value. You multiply now to the tax rate, whether it is province, city, or municipality. Then to get for your special education fund, that is an additional levy, 1% of the assessed value, whether it is city or municipality. Take note, we have the basic RPT plus the SEF. Sir, when will we tax it with your idle lands? Of course, only if the problem tells you that it's idle land. What is the maximum rate? 5%. Okay, 5%. So this is quite procedural, guys. Fair market value multiplied by the assessment level, assessed value. Assessed value multiplied by the tax rate will give you your real property tax basic. And to get for your SEF, that is 1% of the assessed value. 1% of the assessed value. Okay? Now, what is our collection of real property tax? The collection of real property tax is on the first day of January. First day of January. However, we can do it in 4 installment payments. And what is that 4 installment payments? Every March 31, June 30, September 30, and December 31. So it can be on January, or you can pay in 4 installments. March, June, September, and December. Where will you pay it? It's still on local revenue treasurer. So all local taxes, fees, and charges shall be collected by the city or municipal treasurer. The city or municipal treasurer may deputize the barangay treasurer, provided that the barangay treasurer is properly banded. So this is the band filed by the barangay treasurer. And the premium on the band shall be paid to the city or municipality concerned. Okay, so take note, it is your local revenue treasurer, but it can deputize the barangay treasurer. Take note of that. If you still remember in your local taxation, there's no deputy because again, you can collect per type of local government. So the provincial treasurer can collect, the city or municipal treasurer can collect, the barangay treasurer can also collect. Here, you can deputize the barangay treasurer. The city or municipal treasurer can deputize the barangay treasurer, but you cannot deputize a private person. Okay, remember that because we said we cannot delegate it. We cannot delegate it. Okay, so let's wrap up our real property taxation. So what did we learn in your real property taxation? First, you determine the fair market value. Then you determine the assessment level. In determining the assessment level, the assessment level is based on the type of property, whether it is land, building, machinery, or special class of property. And then you determine the classification of that property, whether it is residential, agricultural, commercial, or industrial. Then we get your assessed value that is equal to your fair market value multiplied by your assessment level. Then we compute for your real property tax and then your special education fund. Real property tax is equal to your assessed value multiplied by the tax rate, whether province, city, or municipality. Province, 1%, city or municipality, maximum of 2%. Special education fund, that is equal to your assessed value multiplied by your 1%. Okay? And then we could have an additional tax for your idle lands. Idle lands, 5% maximum. Do not worry for the problems on your quizzes and on your activities. I will provide already the assessment level. I will provide already the assessment level. So it's quite easier. It's quite easy for you. So what if you are given this data? What if you are given this data? The real property tax on a property is 30,000. The property is located in a city. What is the assessed value? What is the SEF? The RPT on the property is 30,000 pesos. The property is located in a city. What is the assessed value? So how do we compute for your RPT? RPT is equal to assessed value multiplied by your tax rate, and we have your RPT here. So our RPT is 30,000, and the tax rate, since it is CT, that is 2%. Therefore, to get for the assessed value, that is 30,000 divided by 2%. So 30,000 divided by 2% is equal to 1.5 million. So our assessed value is 1.5 million. Next, what is the special education fund? Our special education fund is equal to your assessed value multiplied by 1%. Since we have computed our assessed value at 1.5 million, 1.5 million times 1% is 15,000. Okay, this is in case you are given quite a different type of problem. A while back, our problems are mainly coming from getting first the FMV, then the assessed value, then finally the RPT, including the SEF. Now, it is a type of problem wherein we need to work back. From your RPT, we get the assessed value. Okay, so you just need to work on the formula that I gave you. Once you master that formula and you master the process, it is easy to answer problems in your real property taxation. Whether it is this kind of problem, a work back problem, or the straightforward problem, which is like this. So we had examples on both. So that's it for your real property taxation.